Here's a question I get every day. Hey, I want to buy a house, or hey, I want to refi, where are rates at? And that's a very loaded question. Rates are complex. Rates will vary depending on your situation, your credit score, the loan amount versus how much equity you have, what kind of loan program you're doing. There's many, many factors that go into a rate. So seems like a simple question. There's a lot of info that goes into what your actual rate is. So let's talk about how do you shop for interest rates. I'm going to really pull back the curtain. It stands for annual percentage rate. It's a way to compare it was created as a way to compare different types of loans that kind of have different features. What they're doing is taking the rate you're quoted, adding in some of the fees of the loan, not all of the fees, and calculating that into a percentage rate. Like I said, that was created to compare different loan types that have different features. But what it doesn't really tell you is like the breakdown of what those fees are. So the rate might sound great, but your APR is super high. But why is your APR super high? So APR is a quick comparison tool. I'm not saying it's bad. I'm just not saying it really shows you the whole picture. Here's the other thing I see a lot, or I hear a lot. They'll say, I got quoted X rate. And then I'll go price out that same situation. And it's like, okay, hang on. Did they give you the cost? Did they tell you that cost any money? What are the fees associated with that? And a lot of times it's just a number they've been giving. There's no context to that number. So those are really, most of the time, mortgage rates are in the same ballpark of each other. Now, there can be some differences between companies and lots of other details we won't talk about, but most likely you're not going to get a rate 1% lower than someone else. There's always an exception to the rule. Maybe someone's running some sort of special or runs super lean and mean. Who knows? So if you get a rate that's way less than someone else quoted, that's your first clue to look a little bit deeper. What you want to do is always get a full quote that shows the cost or a high amount of discount points. The rate you're quoted and your APR will be a greater difference from each other. If your rate and APR are close to the same number, then typically that means you don't have a lot of APR related fees. If your rate and your APR have a greater difference between the two, then you have higher fees. Those aren't always necessarily directly related to the interest rate. But again, like I said, APR was created to compare two different types of loan programs. So APR doesn't give you that full picture, but it is a quick little way to check. So like I said, first thing you're going to look for are there discount points or origination points? How much? It's not really my job to tell you if it's worth that money or not. You can choose how you want to spend your money in your transaction. But what I do is I say, okay, let's look at the break even. So if that cost you, that rate, the lower rate costs you $2,000 up front, but it saves you $60 a month, how long does it take you to kind of break even on that upfront cost before it starts saving you money? Paying discount points is really a long-term play. So if you do want to pay discount points, then there's a couple of things you want to think about. Are you planning to stay in that home long enough to really recoup and see the benefit of paying that money up front? Do you think there's going to be a refi opportunity? Over the past couple of years, a lot of people chose not to pay discount points, hoping we would have a chance to refi out of these higher rates. So that's the first thing you really want to compare. What's the rate? How much does it cost versus what's the higher rate? And is there a cost or is there even a credit to that? You can choose a whole range of interest rates with different numbers attached to them. You can get the par rate, which means there's no cost or credit to that rate. It's just kind of like the baseline. You can get a lower rate with discount points like we talked about, which means you are paying money up front to have a lower rate for the term of your loan. Or you can actually, what we call premium price your rate. And that means you have a higher rate, but the lender gives you a credit to offset some of the costs of your loan. Sometimes there are situations where that makes sense and we'll do that. Like when rates were super low, you didn't care if it was 3 versus 3.25 if that gave you a chunk of money. So there are some scenarios where premium pricing your rate makes sense. The other thing you want to look for in your loan quote is all the other fees, and are those realistic fees? A large majority of your loan fees are not really attached to your mortgage rate. So if you're getting a quote, make sure you understand what the whole cost of that loan is. But many common fees will be, like I said, origination fees, discount points. What are your lender fees? That's really the other factor of comparing lender fees. Do they charge like an underwriting fee, processing fee? Most of the other fees are third-party fees. We're just required to quote those for you. So things like appraisals, credit reports, title fees, your escrow account, which is like your taxes and insurance if you have those. That's a large portion of your fees that we don't really have any control over, but it's our job to quote those to you. So if you also get a quote that has like way low fees, make sure that you're comparing apples to apples and the two lenders that you're comparing are including all the fees that are associated with the loans. I've gotten a lot of fees or a lot of comparison quotes over the years with either that are misleading in the fees because they're super low on the escrow account or they don't include title fees. And that's just not, you are going to pay those as part of the process of the loan. So I always try to be as thorough as I can and maybe even estimate a little bit high. I would rather say, hey, I overestimated your cost of the loan than underestimated. No one ever wants to come up with more money than they expected. So not all rates are created equal. Not everybody's going to get the same rate. Rates will vary depending on what your credit score is, whether you're doing a purchase, refi, how much equity will be in the property, what kind of property you're buying. Is it going to be your primary residence? Is it going to be a rental property? There's many factors that go into what your rate actually is. So if you're shopping for a rate, always get the full quote. Look at all the fees associated with the rate and make sure you are, doing that math on how much that loan is costing you in addition to whatever the payment is. You have to kind of take the whole picture into consideration. It's really simple to go, hey, someone told me I was going to get this rate and that's what I want. But do you have enough money is there enough money in the deal to get that rate? Are you paying for that yourself? Are you trying to refi or purchase? All of those things go into, how we structure your deal. So just to wrap things up, my little sales pitch, as a broker, I can shop rates with, I think we have over 40 different investors. Like I said, most of them are kind of in the same range of each other, but it does make a difference. Sometimes I'll see rates at a quarter better from one investor to the other. So it does all add up, especially in a higher rate environment like we're in right now. So I'm always happy to run a quote for you, compare, go over whatever questions you have on, the estimate that you're getting. But just to wrap up, don't take a rate from an online website. You're not giving the full story. Also, just a number from someone is not telling you the full story. It's a good starting off point. APR does not tell you the full story. So if you really are serious about what your rate and your costs are, then get the full quote from someone. If you have any questions, drop them in the comments. I'm happy to answer questions. And if you have good questions, maybe we can do another video about it later. Thanks for watching.